Hi guys, how are you? Vladimir here. This is the live market review, 3rd of August 2017. One day before the non-farm payrolls, the market brings us to some great scenarios to follow for, well, many of the pairs. So let's get started and cover the opportunities we have. Let's start with the one we have been talking about already, and that's the Oz versus the franc, which yesterday provided us a very nice opportunity to get in here. It made the double move down, which is a good place, at least to break even yourself, to make sure you're not going to lose, or partial cash out. And there is a good chance that this pair is going to make one more, so it's going to be big double here and small double cycle to bring us to this area. So I remain bearish in my mind for this pair, especially as long as this trend line hold and as long as the lows are holding. So lower highs, lower lows, good situation, good scenarios for us to keep the shorts here. Next one on the list is going to be the euro dollar, which has created already 2 false breaks. We need to go below this low. So if we do go below this low, retraces could and should be considered for a sell opportunity. Now, if we cross above this high, then game over. We will need to see a new high, a new divergence, and that would be the low for the cross then. That's why, once again, it's very important to mention and remind, do not force trading. You have to wait for your setup. Otherwise, you might regret it. Very simple. So when you go against weekly chart, against weekly time frame and daily time frame, play it safe. Safe means at least 2 false breaks and first convergence, which means lower lows. Make sense? In that case only you can call it a possible top. As long as it didn't happen, we cannot trade. So that in terms of the euro versus the dollar. Pound dollar, he did the same for us, which is 2 false breaks and convergence, but this is a brutal one. And this crash happened mainly because of the news published today. There was no cut of the raise, but the fact that from 3 members that voted to hike the rate, only 2 remained, and that show again some negative light, that put again some negative light on the pound dollar, which from my point of view is temporary because they will have to increase the rate later or sooner. And as for now, for us, we should be looking for sell opportunities. So 2 waves to the upside, and we can consider the sells versus the last stop, aiming to trade the double cycle first of all, this one, and then the big cycle we have here, the big triple cycle we have here. Okay, as a correction before, for longer run, we will consider again the longs. Euro pound broke the range we got here, as we've been talking about on a weekly forecast, and provides us basically nothing. And now it creates new highs, so just let it go. The divergence is still here. The zone and the levels are still here. We are still on the top of this kind of range here. Okay, so let it recreate itself. The pressure for longer run would remain most likely bearish. And you can see that based on the monthly time frame here. Okay, you can see that we got 1, 2, 3, 1, 2. You see that? That's a very, very beautiful format which is forming here, and that's what should be coming next for the longer run. So as for now, let it go. It will recreate this top, and very likely it's gonna take us to here. Take a look on these levels, guys. This is what we have here. You can see where the 61.8 coming right here. Okay, we have been talking about the 090, 091 possibilities, and we are there. Now, patience, and that's basically all. So that's another pair on the list to follow. New Zealandian dollar has bounced from the 20 MA and now pulling back a bit. From my point of view, we are still for short, especially as long as this top holds. So I want to see this and go for shorts for second leg. The reason to do that is because we got here kind of a triple cycle by itself, which gives it 1, 2, 3. So we want to see this and this. Okay, that's for the New Zealandian dollar, looking good and behaving very interesting. And the reason we need this two waves correction is basically because we had triple cycle, and this is the classical format: triple cycle down, double cycle correction, to confirm that the first corrective leg, the bigger one, is completed, and then and only then we can look for the trade. Okay, it's the safest way. Now, technically, we could already go and look for this convergence and say, hey, it's ready, let's trade it. But in reality, that was the convergence place here on that low. See, right here. See that, this low? Now, this low, as you can see on the chart, it's already a bullish divergence. So it's a bit of suspicious sign, which means we need to play that much safer. The next one on the list we have is the dollar Canadian, a pair that we have been talking about for a while, completed two waves for us, and now a mystery. Is that going to continue or not? For me, as long as the daily low holds, we are yet after buys for a second round, and this is how I prefer to do that. 1, 2, 3, and guess what I'm looking now, guys? 1, 2, and look for these buys to happen right there, extended for another leg. So this is my view for the dollar CAD, and that's how I would trade it. If we get these two legs down, I would be looking to go and long it again. That could be a really nice opportunity. Aussie versus the Kiwi, another pair. We want to go long as this low hold. We got triple. Oh, no, sorry. Sorry for my measurement, that was wrong. 1, 2, 3. Okay, and we got 1, 2 here to this area. If the divergence complete itself here, that's the place for us to look for trendline breakouts and go long to return to the higher time frame cycle. Now, if it doesn't create a divergence and doesn't create a trend line and just keep going glowing, then it means we are going for another deeper wave down, which would be most likely something like that, to at least revisit this bottom and to remain in this range. Okay, and from there we would be, if that would be the case, from there we would be looking for the rebuys once again. So this pair is really interesting one to follow as well. The next one I have on my list is, where disappeared? Oh, pound yen. Pound yen I also want to go long, but we can see that it now holds this resistance, turned to be a false break, which means there are no longs as for now. So we're probably going for deeper correction, so something like that, and from there longs. So on the short term, we got this false break now, we got this convergence idea. We can look to sell retraces for double wave duplication. So the plan a bit changed, but for long run the plan does not change. We are after longs and low, but for short term the plan did change due to the news today, and we have to follow. So we were looking for two waves down, as I explained yesterday, triple cycle. We need two waves down and buy. We didn't get two waves, and that's one again the importance of waiting patiently for your setup and not just, oh, that looks good, let's buy. No. Okay, that's the difference between analysis and trading. By analysis you can say blah 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 blah. By trading you have to be very specific on your setups and your pickups, and this is how you filter your trades. You were waiting for specific scenarios: 3 up, 2 down, breakout of the trend line, enter. We didn't get it, which means no trade. Okay, and that's very simple. That's how you save yourself a lot of headache in such decisions. The next one on the list would be let's see if I covered euro dollar. We spoke about, right? Pound dollar we spoke about. We covered that. Gold and silver, you know what we are looking for, guys. So nothing new there. It all remains the same. Oh, and for indices, again, we stuck in the range. So basically, I don't know. Maybe I'm reading that wrong, but do you really want to get involved in that? I know I don't. So I don't know. I don't really like such scenarios. Break below the range, we can again go and look for the setups. But currently we got stuck here, and all that got stuck in just 2 candles range. That's, do you really want to get involved in that case? I've been asked a lot about it lately, like, Vlad, what do you think? What do you think? What do you think? Is that the time? Is that the time? Well, no. You can see how it looks like. I mean, it's like trying to push the gas button in a traffic. Will that lead you to somewhere? No, right? Most likely for an accident. So it's like, I don't know. I don't like that, so I skip that. And the only one else that we have on the list yet is the CAD versus the franc. Remember this one, guys? Triple cycle down, we double cycle up, correction, and we go for sells. But now there is a chance this pair is changing the plan a bit, and as corrective cycle could be 2-wave up or range. And in our case, that might turn to be the range. So if it does do that and holds here, we can look for sells from that area. Again, if the setup comes, because it's too easy to press the button before the real time required and came. And CAD yen, you know, you have it on the list. We need 2 waves up on correction. That would be all. Oh, New Zealandian yen, short term, possible buys, short term only. Why? Because of the triple cycle. 1, 2, 3. 2 false breaks forming here, even though this one is kind of irrelevant for us. But we got here the beautiful one and the trendline breakout here as well. So that could be an opportunity for us to go long. We have the continuing divergence. One more low would be ideal, because 4 continuous lows in a row in continuing divergence are the best. And you can learn it in the Divergence University, the full theory about that. And if we get this one more low, it will be perfect. We are going to look for short-term buys and then return for sells based on the daily cycle. Okay, so that's for the New Zealandian yen. And the best levels to do that, by the way, take a look here. You see where the levels are? Here and here. That's our zone for creation for these possible longs. In terms of possible bottoms, you can see we have the 5th and the beginning of the next days. That's the beginning of next week. So there is a good chance it's going to happen during this weekend and beginning of next week. And one last one is the dollar yen, which for long run I remain short. But for the short run, this is the range where we might be looking to trade from, and this is our zone. Now, on the 4-hour chart, we got this cycle by itself, okay? And that's the level. So we have one false break here, one false break potentially to form here. If that happens, statistically, in non-farm payrolls, dollar yen loves to go higher. So in that case, if that would be a false break, that could be a setup to follow and trade the corrective way of this move down. Okay, so watch for that opportunity. There is a very good chance it's going to form today and bring some movement tomorrow. If it keeps going down without completing the second false break, leave it, because most likely it will look for the bottoms not too far from here. And again, it's only statistically that during non-farm payrolls the market and the dollar yen tends to go higher. In reality, it could be, of course, different. Yeah, that's all. That's what we have. So thank you for watching, guys, and I wish you good trading and stay safe for the non-farm payrolls. I'll see you again with the weekly forecast. Your feedbacks and comments are welcome. And if you enjoy the video, click the like and share your comment. It always gives a great motivation and appreciation. So thank you for your time. See you soon. Bye for now. Happy weekend to come.